Hey folks, welcome to Tuesday the 19th of October 2021. So we did the crypto look ahead yesterday, and I think we'll override it with this one as what's happening today is we have the first Bitcoin futures ETF hitting the markets today. So that is going to be a pretty big deal for the entire crypto space. So what essentially does this mean, right? Well, this means that investors, traders, institutions, funds all over the place are going to be able to really hedge some of their book, or really assign some of their investment on their book into crypto. So um, this really adds to the story that there is a lot of demand for from asset managers, clients, really to get exposure on the crypto space, and indeed precisely Bitcoin. And so we have the launch of this new Bitcoin ETF today. It's going to be coming out with the symbol BITO. You can see here. Now, you're going to be able to trade this on the CME. So later on today in the live room, the Pro Trader room, we're going to be looking at how this opens. See how it goes. It's going to be interesting for sure. Um, but a couple of details to note about this are really number one, in trading any product, especially if it's a new product, you need to read the contract specs of what that product is. And so, it's a pro shares product, and here is the sort of pro shares detail on the BITO ETF. This it doesn't directly invest in Bitcoin. They are going to be trading on Bitcoin futures. So that's going to be, anything from your front month future, as in 1 month for 1 month delivery of those contracts, all the way out to like contracts that will be delivered in 4 or 5 years. And the monthly contracts, the front month is what we call it, obviously expires every 30 days. But, if you want to take a long position on futures, you might get long 2025 December contract, for example, and you don't then have to roll that contract or exit it and then roll into the next one until we get to kind of late December 2025, right? So it's really, really interesting. Here are the different symbols on the different sort of data systems. So the standard ticker is BITO, and the Bloomberg ticker symbol is somewhere in here as well. If we just actually it's on the next sheet. Um, but essentially, this is going to be interesting. So, it's taking front month futures. So V1, it's taking front month futures exposure of 19.728 million here. Actually, sorry, hold on. Is that? Yeah. No, actually, that's to the tune of billion. Actually, sorry, billion. I've gotten my commas all mixed up here. Um, so oh no, that's sorry, 19,728,000. Sorry, it is million. It's a bit early for me here. Need more coffee. So, taking about 64 contracts in this futures month, and then it's looking at, um, well, on a different exchange here, it's taking a little more exposure to offset. But essentially, what constitutes the price of this, right? Well, I think we could pop over to the sacred whiteboard. Actually, if I pull up the whiteboard here, we might be able to do something, and I'll be able to show you how that kind of works. We'll just pull up this whiteboard. Let's see if we have a fresh whiteboard to work with. Just give me a second. So yeah, here's a previous session. We'll just start a new one here. Um, so essentially, it's going to be pricing its ETF against an average of the Bitcoin front month future price on several exchanges. So kind of people tend to think, well, if Bitcoin is at say, let's say 50,000 on my screen on the BitMEX exchange right now, well, surely that means it's at 50,000 on every other exchange, right? Well, actually, no. And this is where ARBs and algos and traders alike can really make some pretty fast and easy money. And so just to kind of look at the the BITO, right? So let's say you have Binance, which is an exchange, and that's got BTC, that's got BTC at let's say 50K, right? And then you've got BitMEX, you've got Kraken, and so on, so forth, right? You've got multiple exchanges, potentially hundreds of exchanges, right? And they're all quoting Bitcoin prices, right? Now, this is actually something I looked at trying to create maybe 6 years ago at a firm I was at, and the I talked to some guys in Australia, which I ended up actually working with, but we didn't work on this together. But we were trying to come up with an ETF project, but it was just way too much work, to be honest. So you've got multiple exchanges, right? And they're all quoting Bitcoin. So BitMEX on Bitcoin might be quoting like 49999, right? And then Kraken might be quoting 50,005 at the exact same time. You could have all these exchanges up, and at the exact same time, this would be the spread. So the spread is between pretty much the spread in prices is well, I'll just come over here, right? The spread in prices is 50,005 to 49999, right? So that's your spread across the multiple exchanges. Okay, so essentially, what this ETF is going to do, it's going to give this, so it's going to close this sort of spread effectively, and it's going to give a more consolidated single price at any given time for Bitcoin, because Bitcoin is traded across so many exchanges at so many different prices at any given time. There's a lot of what's called statistical arbitrage going on, because if I could buy at 499 and then immediately sell at 50,005, well, that's a pretty easy trade, right? And I could just do that all day long. And I'm taking the exchanges for an absolute ride. Now, this is being closed down quite a lot by delays. And this is one of the reasons why Kraken and Binance and BitMEX will kind of, on high volatility events, they will actually close trading, or they will have technical issues that will delay your executions and all sorts of stuff. And that's because if there's a blowout on one exchange, like say, Bitcoin, let's say Bitcoin across the board has a fundamentally sort of shifting piece of news that I don't know, Kraken mainframe wallet is hacked, right? And so you'll have Bitcoin say comes off 5% approximately, like instantly. Okay, well, under that event, all of the exchanges are not going to reprice immediately at the same magnitude, right? So you could, to kind of draw further on this example, right? You could have a situation like this, right? Where under like an extreme situation, you could have, say, your Binance, so your chart's going like this, right? And then you'd have your BitMEX. Your chart would maybe pretty much look exactly the same, right? And then, but it would only pop to like here, and then you say Kraken, using another color. Kraken would be tracking, and then bang, right? Because Kraken got hacked. So you have price disparity here across these different products, right? You've got price disparity. I need to just delete this bit here, right? You've got price disparity on the push low, right? Across the three. So the exchanges at this time are highly exposed to statistical arbitrage, like extremely exposed on their book. So they could stand to lose millions from people working algo trades or who are just waiting for that event of high volatility. And then the pricing goes out across all the exchanges. And therefore, you can buy and sell Bitcoin. So, say for example, in this scenario, Kraken in red, I would want to then buy at Kraken and sell on Binance in black. So I'm long here and I'm short here. And then I just have to sit in the trade. And then because the percentile, the delta, the difference between these two could say be, let's say it's 2%, right? On this on pricing, right? Let's say it's 2%. So if I'm long there and I'm short there, I just need to wait for the exchanges to come and pricing across the board to just come back in line. Okay. So that's statistical arbitrage. And this ETF now is going to kind of, in a way, smooth that out. Not it won't smooth it out on each individual exchange per se, but by using now BTO as a tool, right, as an investor, right, using BTO, all these different prices can, can do whatever they want, but BTO is going to be essentially, right, taking taking the average of that, right? So let's say BTO is in blue, so it will just kind of, steadily go like this after we crash, and then these exchanges will kind of all come into line again, and the statistical arbitrators will then be able to get out of their trades and make money. Okay. Um, but uh, rather than that, this is a safer way for institutions and bigger money players or traditional money players to be able to essentially have exposure to Bitcoin. Okay, because before you would not really catch a sophisticated old school type of investor, um, you know, being long on Kraken, and or go they're not going to go for that stat arb trade. That's a trade that's going to be hedge funds, it's going to be proprietary traders, it's going to be people like us. But for the institutional guys, they're not going to be long Kraken, and suddenly Kraken blows up and we're down 7% on Kraken, but we're only down 5% on Binance Bitcoin. And then they're going to go and hold on a second, and then they're exposed until the pricing comes back in line. It's highly possible for the pricing not even to come back in line, because the problems with Kraken may escalate, and actually it could escalate to the point of default for Kraken or Binance or BitMEX. Whereas if you're trading something that's basically underlying is, or what you're trading is the average of those, say, let's say in this case the three, there's only three exchanges in this instance that constitute the Bitcoin price, right? Let's just say that. Well, you don't want exposure on one of these, So I think I've hammered home that point a good bit. So that's essentially what is going on. The actual fact sheet or the contract spec, if you like, on the pro shares is essentially, yeah, here's your different symbols coming in here. CFX BTUSN is your Bloomberg. BITO, but BITO is going to be the one you're going to be pumping into your equities trading platform essentially. So yeah, just I hope that's a good coverage on what we're going to get in these markets. We can pop over to the crypto charts right now. I'll just take my whiteboard off, and we can kind of see that Bitcoin here on the daily bar chart, well, we were looking at this on the breakout down in here at this point. Let me just zoom in a bit there. You can see this breakout here on the 30th of September. We pushed up. I was looking at this hitting 749 092s. It came in. I was talking about it holding at the bottom. It did. It held on the bottom here, 3rd of October, and it's just been one-way traffic ever since. So we're trading up towards 65,000, using a little bit of a Fibonacci extension on this as well. But for me, this range will trade out to the prior all-time high at 65s on this is BitMEX exchange. This is Bitcoin to USD spot rate, right? Cash for Bitcoin on NYMEX, Bitcoin to the USD. So 65,000 is the all-time high there. All right, so I hope that's useful to some people out there, and if not, enlightening a little bit about statistical arbitration. If you do want to join us, feel free to click the subscribe button in YouTube, or to get into the Discord room, just go to duggancapital.com, and there's information on how to get into the live room there. And we have our active crypto room, traders, pro traders, and lead traders all chatting day to day. And indeed, I'm live each day. All right, have a good one, and I'll talk to you later. Cheers.